All right. Wealthies, welcome back. If you're new here, this is All the Wealth, WealthMore's wealth building channel. And I'm Mical Jeanlys-White, your host. And with me today is none other than Matt, our portfolio strategist. And we have so much to unpack. We are past the halfway mark of the year, and so much has happened. When I think back to when we did our first episode anticipating what 2026 would look like, things are way, way different. Absolutely. Which leads us to the AI investment. And a lot is happening in the world of AI. It's not just the AI firms, it's the data centers, it's the ones also working on memory. And we wanted to get into that. What is going on? How should you guys understand the AI landscape and what it means? There's a lot of heated debate about where data centers are being built. Some of you have seen the graduations where young people are booing. There's just a lot happening. There was the investment side, and then there's the geopolitics around it.
There's no shortage of things to talk about. So if we break it down a little bit, we can talk about kind of the AI companies and the ecosystem that they've built and the kind of circular spending issues we're seeing as well. These AI companies, the open AIs, the Anthropics, they're getting involved with many different companies. They driving up prices for PCUs and GPUs and memory and data centers. And that's why we're getting secondary buildouts of huge data centers. We're getting hundreds of billions of dollars by big companies investing in these things. So there's a risk there, the circular investment risk. The best examples, Microsoft's a big investor in OpenAI, and OpenAI needs a lot of memory and data centers and clouds usage. So some of that money that Microsoft's invested in them, and they buy Azure Cloud, which is owned by Microsoft. And then Microsoft says, great, we've just invested and sold. It's the circular spending problem we're seeing. And at some point, that could be an issue.
Which is very much a Silicon Valley behavior cycle. But how should wealthies think about these buckets? You have the NVIDIAs of the world, that's one swim lane, they're producing chips. But then you have the Anthropics. Anthropic is Claude, OpenAI, obviously, ChatGPT. And then you have the data centers and now the memory chips. As people are trying to make sense of this, people just hear AI. Am I investing in AI companies? But they're doing very different things. Matt, how do you think about the ones that are your NVIDIAs of the world versus, and some of these are not even publicly traded yet. Like OpenAI is still a private firm. Anthropic is still a private firm. They are planning on IPOing later this year, but they're still private companies.
Yeah. So how I would, from an investment point of view, I would just make sure that you know what you own, right? If you're in individual companies, and make sure that you're not overexposing yourself to one trade, but know that there's also lots of different ways that the AI trade can work. So the NVIDIAs and the Amazons and the Microsofts, yes, but there's other companies that are building out data centers, and then there's companies that are supplying power to data centers. It affects so many parts of the economy. This is really a revolutionary change in terms of the amount of investment, the amount of dollars that are going through the economy. We're still seeing a mixed result on the jobs front. We're just not sure how that's all going to shake out, if it's going to be a job creator or changer or destroyer. We talked about this a little bit too before the show, whether or not AI is going to be good enough to replace 1,000 people at one company. So far, we're seeing it's not the right move. Ford, for example, fired a lot of people, and then they were like, wait a minute, it's not as good as we thought it was. Can you come back, please?
It was costing them.
There's many ways to play the AI trade. For us, as you know, at WealthMore, and we want to be diversified. We want to own not just AI companies or AI sectors. We want to own boring sectors too. We want to own industrials. We want to own healthcare companies. These are all indirectly affected by AI, but they're not directly AI companies.
The market is still way bigger than AI. And I know you guys will be hearing a lot of noise. There were companies that were on nobody's radar that certainly had a rebirth because they are the electricity suppliers or they're in the memory chip business. There were companies that people were not even thinking about that have sort of repositioned themselves as now being an AI player. And we've seen their stock prices soar. So these are watch outs as potential investors. For those of you who are going it alone, obviously we think you do better with the help of professionals. We think you'll do better working here with us at WealthMore. There's a lot of noise in the market. There are companies, Micron, Veritex, they pop up here and there and catch your interest. But this goes back to the importance of diversification. When you have a market that is moving so quickly, and there are so many unknowns in terms of what the impacts will be for different industries, job sectors. Some people are debating that memory chips will get cheaper. Others are debating elevated prices in the near future. There are other people saying that the tech gets better, you won't need as many data centers. So if you're out there buying up data centers and then find out we don't need as many of them, then you're going to see data center stocks tank.
Well, we saw this already last year when DeepSeek came out. The AI from China really shocked the markets because they were able to do the same things OpenAI was doing, but at a much more efficient rate. And if it's much more efficient, maybe you don't need all these powerful GPUs. Maybe that changes the equation. We don't know where this is going to be 5 years from now. We don't know which companies are going to be the winners or losers. So it's better to own a broad basket of them than to try and pick the right one because the right one might not even be there yet.
Absolutely. And I want you guys to not fall for the sound bites that you're hearing on certain shows because those are folks chasing alpha who are trading day in, day out. They are not you. You do not have the same amount of data or insights, market analysts that they do. So please, please, diversification matters. And it leads us to the topic of IPOs.
Yes, there was a certain big one recently.
There was a certain big one, and there are a few more big ones coming this year. We had SpaceX, and in the pipeline are Anthropic, Claude, and OpenAI, ChatGPT. And I know there will be just as much excitement and flurry of conversation around them. But we're now a month or so since the IPO of SpaceX.
There was a lot of hype, obviously, the first week. A lot of people are really excited to get into this company they couldn't buy before, and the stock price shot up. It IPO'd at 150. It shot up to over 200 in the first, week, 220, 225, something like that. But as we look today, it's actually trading underneath that price point already. We want to talk about IPOs specifically. You don't want to chase hyped up companies with big narratives because a lot of the time it doesn't work out. And we've seen the biggest IPOs in the last 5 years, 5 or 10 years. They don't pan out a year later. A lot of them lose significant amounts. The drawdowns are even more significant. And what I mean by drawdown is the price from the peak to where it's trading now. Say you bought SpaceX that first week, you bought it at $220 a share. You're already down over 30% in less than a month. That's just how fast things can move. And the other problem we have with IPOs is they're sold, right? It's a marketing tactic. And people forget that SpaceX 10 years ago was a $10 billion company. Today it's trading at 2 trillion. That's a pretty big gain in 10 years. A lot of stuff has to go right to justify that that valuation. And furthermore, there's a lot of shares that are going to come for sale in the next 6 months.
Yeah.
There's a lot of investors in SpaceX from the last 5 or 10 years that have done very well on their investments, and they can't sell for 70, 90, 180 days. But as soon as they can, if it was me, I'd want to take some profits off the table. So there's going to be a lot of selling pressure in that stock over the next year.
I want to give people more context around the transition of a company from being private to public. Companies start like a startup, then you have investors that have invested, and they haven't had a liquidity event. Unless, and we won't get too technical, but unless you can move shares in secondary markets, These investors that have been on this journey with these companies for the last 10, 12 years are waiting for a company to go public. And that is the big event for them to actually get some money out of that investment. So when Matt tells you you've got this big backlog, it's all the people that you guys have never seen who put in private money into these firms who now are waiting for this IPO event. And there's tons of incentives to get it from that 10 billion when the private folks were investing to a trillion. If you can just imagine the multiplier of that to bring it into the
Two
public,
trillion, 2 trillion. Yeah,
to bring it into the public market so that everyday investors can jump in so that these folks can get some of their money out. There's just a lot of
yeah,
noise in these initial public offerings, which is why they're called initial public offerings. They haven't had a chance to season. They haven't even had a chance to go through 1 quarter of showing results. When companies are private, they don't have to share reports with the public. So until you have
yeah,
SpaceX's first earnings call, their first here's how we're doing, that is why it is a initial public offering. For the longest, we're really not a thing that everyday investors jumped into. But now you just have so much marketing communications around new offerings, and you have certain firms presenting it as a massive investment opportunity, but without you guys having the understanding that this is actually quite normal. There's a lot of volatility that goes in a firm when it IPOs, and a ton of it is in that first year. So I want you guys,
yeah. And
yeah,
I
Matt,
was just going to say that that initial public offering from SpaceX, that the dollar amount was huge, but it represented about 5% of their shares that are traded. So as soon as that extra 50% becomes available to sale, you better believe there's going to be people selling. Again, this is us just giving the devil's advocate side of the story.
yeah,
It could also go the other way. We just don't know. But
you got it.
there's just a lot of pressure coming from the selling side for sure.
We just want you guys to understand that IPOs are generally in that higher risk of new investments versus a investment that's been public for quite some time, where you have tons of market data, you have a leadership that is regularly giving guidance, that is doing investor calls. It's just very different. So we want to highlight that, as there are big IPOs in the pipeline for this year, and you guys are going to see just as much news press around it. But we want you guys to understand, like, what is an IPO? What generally happens in the first year? This SpaceX behavior that we're seeing is not unusual. It's actually to be expected. And there's still a large backlog of folks who can't trade those stocks yet. That's also going to impact what happens with these new initial public offerings within that first year.
Yeah. Yeah. That's be careful out there. And what I would say is if you want to invest in something like a SpaceX, just make sure you understand it, you understand the risk, and you know, fun money would be the recommendation there. Only money that you're willing to lose.
Yeah. And don't go down that FOMO now or never mentality. Schedule one-on-one with your WealthMore advisor. If you just want to talk about the AI bubble or what's happening, you can join us for one of our 60-minute wealth plan sessions. Those are 199, but obviously we'd love for you to be a member. But this is where having access to a wealth advisor can be helpful as you're trying to make sense of different things in the market, and just better understanding how to think about different sectors, how to understand these sectors and what's happening, be it with an IPO, be it with how should I think about the AI, how should I think about diversification. That is why we come on here, to give you guys the insights. But we know it doesn't cover everything, which is why you have the opportunity to work with our advisors directly here at WealthMore.
For sure. I mean, it's well put. The best thing you can do for your investments long term is to not make the big mistakes. So better to have a sounding board and some help, professional help to make sure you don't make those big mistakes.
Yeah. And dare I say it, I think I say it on every episode, the fundamentals matter. Be leery of the headlines, stay informed. This is such an exciting time to be in the markets. I'm always excited about the markets, but this is really an exciting time to be in the markets. This technology is super interesting. How it's playing out and evolving is super interesting. We're building our own AI feature here with Mora, the AI wealth coach that's available to all of you guys. So we're not just looking at this sector, we are also users of it. So we understand how these tokens are being used. We understand how these LLMs are working. We understand if these models are still hallucinating. It's an exciting time to be investors in the technology, but also users of it. And the tech today is not the tech that will be here 6 months from now or even a year from now. It's really an evolving business model.
Yeah, we haven't even talked about things like quantum computing or the next big thing. It's never boring trying to figure out what's happening now and what's happening next as well.
I want to leave you guys with this. We are halfway into the year. We still have another 6 months to go. The news cycle, the events will continue, but we are staying focused on earnings. We're staying focused on what's happening with inflation. We want you guys to look at your portfolios, look at your spending. Inflation makes it harder to save and invest. So, this is a great time to find ways to save and invest so that you continue to stay on track. But it's also just a great time to take a step back and look at how has this market been performing and what are the interesting areas of the market and interesting things that you can foresee happening.
Yeah, and then projecting out yourself in the next 10 years and 20 years as well, not just thinking about what you're going to invest today, but what that might be worth in the future as well.
You got it. This is a long term strategy. This is a long term wealth building journey. The more informed you are, the more you are tuning in to episodes like this, getting the insights, tips, meeting with your wealth advisor. But our job is to give you as much insights, information so that you feel informed and you can make the decisions that make sense for you. The
For
strategy
sure.
that you're comfortable with, the risk appetite that you're comfortable with.
The best day to start investing is the day you're born. The next best day is today. So
Stay investing. Matt, anything else you want to leave for our audience?
just that if I gave you any predictions that they probably wouldn't come true in 6 months. So let's not
Yeah.
go there.
It was an interesting 2025, and we are going to have yet another interesting year in 2026. But stay tuned. We'll be back at the end of Q3 as we look at where the markets look at that point. But stay invested, stay on track, check into the newsletter. We put that out monthly. And then as things evolved, if we need to come back sooner, you'll see us right back here with a market recap.
Thank you.
Thank you guys. This is All the Wealth. Stay tuned.